FXBros.
What's up, y'all? We are back for another Sunday live. Supreme. What's poppin', brother?
Oh, it's good.
Ain't shit.
That's that article right there. I just put in a group. I was talking about how pretty much 75-85% of August, September, it'd be bearish for AUD dollar.
Nice.
I went and checked back. Looking at the month chart is definitely accurate.
Huh.
At least 50.
Well,
at least one of them months gonna be bearish. Most of the time too. Should just go looking back. August and September.
Look at the month candle so far.
Yep.
So I guess with us being so engulfed right now, I wouldn't see it close like this, but it could close like this later in the month, but I could definitely see some depending on how it's looking on the other time frame, the 4 hour, the daily.
Bearish is at the bottom. You got to go to the week chart to see the bottom.
Right.
It's under all the swing lows on the low charts. Low time frame.
Scully was on.
What's up, brothers?
What's good with it?
Nice, nothing much.
Yeah, I do see it though. I see the February bearish engulfing. I see how I tried to tap into like 50% of that candle right here. Created a equal high on the monthly. So that's strong resistance right there. And then, yeah. We 6 days in and we already engulfed the previous candle. So that's a lot.
Yeah, they says something dealing with it's the first quarter.
FXBros Supreme joined.
Yep.
But I'm already in a short. I forgot I was in a couple small positions.
Yeah, I think I am too. I got still got a tester that I got short on. But looking at the weekly, this is our first week of the month right here. So we got a bearish candle and it's approaching this other little point of rejection. We just have to see if it's going to break this low and try to come down to the old lows of last year, October. But that would just be a continuation of bearish candles for the week. So if that scenario does happen.
No, the weekly target, 6,400. That's one ATR on the week chart. So
6,400 flat.
Yep, you could say that. Yep. 63.99, 96. So right before that swing low.
I can see that. That'll be a nice little area it could tap to. It'll all be a question of will it close down there, and the close these lows on, especially during this week. We got a nice little wick we could feel if we get volume starting to head down.
Yeah, 2 ATR is going to be at 62.26, so that's still right above that swing low from October last year.
Yep.
So you can also look at that what happened last week, how it wicked down and it tested that zone and it kind of popped back up. You can see that as like a rejection too, just to keep a point of that. So this week we would have to drop and break through that, fairly heavily. So I would mark that up. Yeah, like right there. I will mark that up and look at that on the daily and see once we get a closure below that on the daily. And we should be able to go further down. But
we still
last week low?
Yeah. You talking about this low down here last week?
Yes, like how we tapped into there, but then we didn't close into that 4 hour gap. So this week.
514. Yeah, I'll put a little line right there.
Yeah, for those bears to continue, I would mark that up and wait for a closure on the daily. I wouldn't, wait for it per se, but yeah, for me, I would wait for a closure right there to be like, all right, yeah, we bear. Now it can drop and you can catch some sales for sure heading into that, but in that case, I would need for it to move up higher to give me a better entry. Because right now on the 1 hour, you pretty much consolidate like in between of 66.
Is that 31st?
65.50. I mean 65.60 and 6600 basically on the hour.
Yep. So you know what I'm saying? You want to like kind of wait for, I guess, something to happen even out of there.
You want to break. You definitely want to watch an hour break under there. Exactly. But that area you was talking about, that's that 1 week low. That's the swing low on the 1 week chart, the last one at least. And yeah, that's definitely the area. That's definitely the key area to watch this week for sure. Like
on a smaller time frame, see how it reacts from their area.
Right.
Yeah.
When you enter trade and you looking for an entry, like
that's the liquidity zone, because that's where all the stop losses.
Facts.
I've been thinking about that.
And it's strong liquidity because it's bouncing from these previous lows.
Exactly.
So yeah, that's very strong liquidity. That's why I say I could see it being that it's engulfed so much for the month. But looking at the weekly, it doesn't look like it did. Like I could see an engulf for the month coming from here. That would be a nice engulf because you got this price section right here. But that monthly chart, if we go back to it, let me throw some green back on.
Yeah, just to say that's 6-7 days.
Yeah, this is already, this whole starting from Tuesday, August 1st.
That's because last month just didn't have that much volatility. Well, it kind of did.
A lot of volatility because it went all the way up here, but it didn't have a strong body close, so it was easy to feel the bulk of what it did as far as on the bearish side. Like it did a lot on the bull side, but just didn't close.
Yeah.
But this is where all the strength was at, and right now we below that. Question is, looking at the monthly chart, will it keep going down? We don't know that. We got to wait for the weeks to transpire. But I do know one thing, being that it engulfed on the monthly, like just looking at what the monthly did, it is engulfing the body and the low, and it's only 6 days in. But when you look at the weekly, now you see that move down, which was really this. But where is that monthly open? Because this is so open at 67.17 and close at 65.81, 67.20, 65.81, 67.20, 65.81. Okay. So the monthly body is looking like it's starting from here, and that's weird. 67.20. I wonder if it's because I got my time zone set, but monthly had no wick so far. High 67.23. Okay. 7.23. Oh, okay, I see. So the monthly candle is starting from here, not from this July 31st into August.
Yeah, that's weekly, so it ain't gonna show that day. Would depend on the day.
But, does that make sense? I'm trying to make it make sense because this weekly chart is starting from the week of the 24th, but the monthly chart of August is showing this as the open. And this little wick, this long wick for the weekly, that little piece up from
it depends on the day of the week, like because you're looking at Sunday, Monday, and then yeah, what 1 week in is where the other one starts. So sometimes they might have a gap too. Yeah, it could be weird sometimes. Yeah. It's right though when you really inspect it.
Why I would open here on the monthly though.
Depending on when that Sunday or Monday was, I guess.
Because this Monday, this monthly is showing the first Monday out of, I guess, the first.
This is gonna show the first trading day. You see?
Well, what about this? This is the first trading day of the month. It's Thursday, but it's the 3rd of July on a Monday. That started this monthly chart.
Yeah, they don't always like some of them start on the 3rd. Yeah, the 2nd, it could start on the 2nd.
Well, it's
the
not
1st,
even the 2nd, it's the day of the week. Like this one Tuesday, this one Monday, this one Thursday, this one Monday, this one Monday, Wednesday. Like I understand the difference. I guess it's more so. I don't know. That's weird.
When it depends on when the 1st is and if it's a Sunday or Monday. Because I'm looking back, they all start on the 1st, 2nd, or 3rd. And that's because it's going off that Sunday, you see?
Okay. I see what you're talking about.
Yeah, they all going to start on the 1st, 2nd, or 3rd.
So it's going to start on
the first trading day.
So,
but that's not always the 1st, you see? The first trading day not gonna always be on the 1st or the 2nd. Sometimes it's on the 3rd.
I got you. Because on this week, speaking for Monday the 3rd, the first trading day would have been like the Friday type shit.
Yeah.
Friday or no, it would have been Saturday, which is not a trading day because Sunday is the 2nd.
Monday exactly.
Yeah. Okay. I see what it's on.
Yeah.
All right. That kind of threw me off a little bit. My bad. But all right, so yeah, we bearish below that. The weekly is starting from here. We didn't close. We did week through this little important little area, but we didn't close below. So that gives me more kind of surety that we're gonna fill this gap, especially how this candle closed right above this 4-hour zone. I have this gap. I'm kind of feeling like I don't know how much we might pull back, but I do feel strong about us filling this wick if we could get the bearish push during volume.
Yeah, I think a lot of that was news induced too. Well, I know a lot of that was news induced. So you got
right here. Yeah, Tuesday, Wednesday. What, last week? Just Tuesday and Wednesday?
Yeah, last week, just a lot of that movement.
That's crazy. Tuesday and Wednesday smashed NFP. This NFP right here.
Right.
So I guess that was just that was that a trading was that a news day?
Yeah, I thought that was like interest or something like that. I think.
Okay, it could have been for the Australian dollar though.
Right.
Got you. That makes sense. That makes a lot of sense.
Yeah, on the daily, look like price is trying to get back into that range it was in,
right here.
Yeah, with the swing low of basically 6,600, it's trying to get back to that support. So I think everybody watching that 6,600 area, 66 even, 66 cent even, trying to see if it's going to, become supportive as a resistance. Right. Wait, Oh, okay, yeah, I see. Yeah, it rejected and it's already closed under it. It haven't closed back up above it, like you said. It rejected it, so
Yeah.
I think it was some positive news for the Australian dollar. The interest rates went up or something. They didn't.
Oh yeah. You're right. No, I think it stayed the same. Or did it go up?
Yeah, they paused it or something, but they said I think they paused it, but they want to. They're expecting the currency to come up before they increase it or something like that.
Gotcha.
That article I put in had a lot of good gems in it. You check that out. I dropped. But yeah, I'm already in shorts. I'm short at 65.
65.
What was that from last week? Or
Yeah.
Okay.
Yeah, I was gonna get out, but the market be closing like minutes early.
Oh yeah.
And the spread sometimes that shoots up too.
The market be closing at like a weird ass number, like 3:53 or some shit Central Time. I thought I had a car. I wanted to get on the small minutes and just looking at it, time frames. Nah, but yeah, I'm in real small positions. I really just been just looking for high risk 2-to-1s for real, 2-to-1s only on the small time frame. Pretty much been scalping for real, scalping with the trend.
Right.
Scalping with trend.
What's the ultimate trend that you're going off of when you like? What time frame are you scalping with?
Definitely the weekly.
Wait, no. Like, what time frame are you entering on?
Oh, I'm looking at the 15. I'm looking at the 15. I might enter off the 5 or the 1. It just depends on how, where that hot zone at.
So you're looking at the 15 for your trend.
Yeah, I'm looking at the swing high and the swing lows on the 15-minute. I'm seeing if it's gonna form a new swing high, swing low, if it's gonna stay in range. Usually,
that's that true scalp.
Yeah.
I mean, it's crazy because like scalping can be anything, any time frame. If you ask me, because I think scalping determines how long are you in the trade or not.
Right.
So
right.
Yeah, so you got a lot of people like.
But it'll be very difficult to scalp the daily time frame and get out in the next 15 minutes.
That's true. Exactly. That's what I'm saying. That's why, like, if your time frames are like 4 time frames away from each other, that's when shit get tricky. So, like, if you want to scalp, like what I do, I scalp off the daily and sometimes the weekly, but I enter on the 1 hour, sometimes a 4 hour. So that's how I can sit in my trades, but it's still a scalp, scalp, but they turn into day trades, or swing sometimes. Like last week was stupid, but it was just one trade that really just, took me there. Like I literally didn't have to trade after, I don't know what that was, Tuesday or Wednesday, but I think it was Tuesday, but yeah, man.
That makes sense.
Because you gotta have confluence. So it's like if you you won't have confluence looking at the daily and entering on the 15-minute. You know what I'm saying? Because it's
the daily. The daily ain't good for much. It's just for like a reference, if you ask me, just to see where it's going in a shorter term. The daily is just used for the smaller.
It's good for a good reference. Like you said, if you scalping. Looking at the 1 minute, 5 minute, 15-minute, it's good to look at the daily so you won't
see the high and the low of yesterday.
Yeah, you won't be selling when the daily is at a strong support level, a strong demand level.
Well, yeah, around that high or that low. That's when you want to kind of get out of there.
Yeah.
Or getting in there, but you don't want to be in there while it's reaching a new high, a new low. I can tell you that.
You want to be taking some type of profit at those.
Yeah, or hitting that damn stop loss because you're gonna get burnt.
Yeah.
Because if that breakout happened, like I'm an anti-breakout trader. I learned like everybody loved the breakout, right? But that shit, it be more fake outs than breakouts.
Yeah, because it looks good. Like,
yeah,
everybody know what a direction is after a breakout. You know.
Yeah, so they think.
Yeah, so they think. That's a fact, because a breakout on whatever time frame you're looking at could be a wick on a large.
Right. So it's like ain't no real true breakout for real, because it's like what time frame? Unless everybody is on the same universal time frame, there's no real breakout.
Right.
Like you know, you could say that, you know what I'm saying, but you know what I'm saying, like if it might break out on the hour, but on the day it's still in.
It's more pleasantly visible on the smaller time frame. And when I mean pleasantly, I mean if you was to wait for a breakout on a monthly, you go be a sitting duck.
Well, it just depends on your timing, because you might just catch. Because if me, I go through a bunch of different currencies, because I look for my setup. That's why I like different shit, so I can see my setups on different shit. Like, you know, if Audi ain't doing it, I could go, oh shit, this one at a high or a low, or you know, a new month, a monthly high, monthly low, you know, weekly high, weekly low. So I just be going and just testing on very small levels, just learning for real.
Yeah. You know? I mean, you got me on that, Pip, bro. I'm definitely gonna be like, I want to say that next trading week after we had our talk, I entered on what that was, UJ, and
JPY.
It was a light little, you know what I'm saying, trade. Went to sleep on. I woke up and I was at like 70, 80 pips on that thing.
Yeah. What you talking about? Pound yen or something?
No, UJ.
USD, Japanese yen.
USD? Oh, dollar yen?
USD Jappy, yeah.
Oh yeah. That thing be moving too. I like it because it move with the New York session and the Asian session.
Right.
So you could get multiple, you know, you could catch it multiple times. Like, and I use it as like a measuring pair too, because like if like right now dollar is up on yen 0.08. So I know the dollar is stronger than yen. So I know if the dollar is beating FXBros Supreme joined. Yeah, so if I look at AUD dollar and I see, well, damn, AUD is stronger than the dollar, so I know AUD gonna be stronger than the yen. You see what I'm saying? Like if the dollar is beating yen and AUD beating a dollar, what that tell you? AUD is stronger than both of them, so you definitely want to go long on that AUD yen. Shit like that. It's like it's just correlation, you know. Yeah. It's just simple correlation. But also, I make sure you don't cross yourself out. You know, like if you long on a dollar, you need to make sure you stay long on a dollar across different trades, unless you're trying to hedge. You know, that's something else I do. Like if I hopped in a position, I'm like, damn, I was kind of looking at that wrong. I'm like, with AUD dollar, I go with New Zealand dollar. If I don't like what I entered, if I think I entered the wrong way, well, AUD, I keep it open, put my stop loss where I put it, but I'll go and make the opposite trade on New Zealand dollar just to kind of balance out. And, you know, I put my stop loss there, whichever one hit, you know. Yeah.
So you're using both of those Australian type of
right. They basically do the same thing.
I mean, and then too, when you looking at the different currencies, another good way I like to look at it, instead of looking at what's the stronger economy or what's the stronger currency, is more like what's the best performing currency. Because overall, I be looking at it like the dollar is always stronger than the Australian dollar. I don't care what the chart says, it's just on an economic standpoint. The dollar is,
but it do matter temporarily because that volatility get crazy.
That's right. And that's why I go back to performance. Like if the Australian dollar is performing better, then yeah, it's probably go show that in the charts. But there's not to say that it's stronger than the dollar per se.
Nah, you just go to the month chart and you can see that. But like I like right now, oh yeah, I'm tripping. Yeah, like if you go to the month chart on AUD dollar, you'll see that. Yeah, dollar is definitely killing AUD. You know, the straight red. all, well, if you put it on Hackenashi, you can see it better, but that thing is going down. And you put your trend lines on, you can see like that thing going down. So you know, yeah, that's correlating to what you're saying. You on this pair, you might want to enter more shorts.
That drop was the succession of the dollar after the market crashed in 07, 08, 09. So when the market came back and everything was good, real estate was on an increase, you know, money was back flowing. That's the drop we're experiencing that you see on the monthly, like from September 11th. Damn, September 11th, great. But yeah, around that time, from the 2011, 2012.
Yeah, that shit kind of been dropping from September 11th.
But that the reason it was dropping because the dollar
going up.
Like you see where it went up. It went up from the crash 2008.
Right. Yeah.
All the way up. So that was when the market crashed. The dollar was, you know, weak against the Australian dollar.
Mm-hmm.
The Australian dollar had a better performing economy around that time. Maybe they didn't experience as much.
Well, if the dollar go down, everything gonna look like it's going up. They don't even have to be stronger. You see?
Yeah.
Now, if they do get any kind of strength during that period, then they'll push it up even more.
Right.
But that's why I say, like, it do matter how the dollar performing today, because sometimes the dollar's strength be at like a 0. I be watching that shit daily. But then later on that evening, that bitch would come right back to a 7 or 8. So it's like, you know, you definitely don't want to bet against the dollar. I'm gonna say that, you know, like not too much, like very short time frames. Like you don't want to bet against the dollar too long, you know, or too often. Like it's just not wise.
Do y'all know the year that they announced like the housing market had crashed? Was it 07 or 08?
I thought it was 08. But I don't remember, but just from, you know, listening to podcasts and stuff, I think it was 08.
Let me see, because that's gonna matter.
You said when the housing market crashed?
Yeah, when they announced it, when they said like, you know, the housing market crashed.
I don't think they ever announced it. Huh?
No, they announced it because after that, the Lehman Brothers went under and some other banks went under. Like
that was in a housing market, huh? That was the
no, that was the housing market because they all them damn them bad loans, them fucking.
That's what I'm about to say. The banks. I thought it was, but yeah, same thing.
Yeah, but that's what started that whole crash in the economic downturn was from all those mortgages that they was giving to people that couldn't afford the shit. You know, hypothetically.
Right. Hold on, right quick. I'll be right back.
Let me see. Last market crash. 2008, the housing market bubble burst when subprime mortgages, a huge consumer debt, and crashing home value converged. The fall of 2008. So the only reason I wanted to mention that is because if we look at the market on here on the monthly, this was 2008, right? That's when they announced the crash late, right?
Yep. I see it. I see.
Why is the market dropping? You see the manipulation? When the market is failing, the dollar, this chart should be going up. Why did they have such a hard drop when they announced that? That's manipulation at its best.
Wow,
that was all the people taking profit or manipulating people into sales, grabbing liquidity from these lows right here, and especially this low, and then shooting up from there.
Well, it was just a 3-month period. It was a 3-month drop. It dropped.
Yeah, but it dropped in the fall, right? Exactly when they announced.
Yeah, August, September. Once again, that August and September. Watch that. And then it dropped again in October. And then it started to consolidate and went up. It broke out in April of the next year.
Ultimately targeting this high, which it eventually swept, consolidated some more. And that's when we had the breath of fresh air, if you will.
Yeah.
Nah, facts. But that just stuck out. Like out of all that movement,
But damn, if you think about it, the market is right where it's at though. Look at that. The market is right where it was at when it dropped all the way down. Right now, that's pretty much where it's at.
Right. You are right. You are right about that.
Damn, that's interesting.
Mm-hmm. And this is the COVID lows down here.
Yeah.
Crash for that.
Right. And that was, other than that, that was the lowest ever, pretty much since the beginning.
The market crash. The dollar is weak against a considerably weaker dollar of the Australian dollar. Is going to show that the market should go up. Right when COVID dropped, why did the market crash? Yeah, I know it went down. Yeah, it went down. But you're looking at it from the dollar against the Australian dollar. We know that a dropping market is a stronger Australian dollar than the dropping market is a stronger
dollar.
Dollar. So if we were strong, what you think we were strong from? Was it just the medical field was holding up the economy because we were selling masks and gloves at an alarming rate?
It's because the dollar is the #1 sought after currency.
It's because they was manipulating that shit and make everybody think, oh, we crashing. Let's get into the sale of our lifetimes. That's exactly what that was. So just in the future, what all that means is when they start talking about bad stuff and you see the opposite stuff happen in the market, just know that's manipulation. What was really supposed to happen is coming soon in the markets. That's all we gotta look at that. Like that was manipulation at its best. So let's go to the daily once more just to talk about that. One thing I like to point out, last week, we finally reached, which we struggled to do in this drop. We had consolidation, then we bounced back up to test these highs. Couldn't break it, created a double top type scenario, so that's heavy liquidity above there. Then we dropped again, and we finally reached into this 4-hour gap, liquidity gap that we had on the 4-hour from June 1st. That we remember in June we was experiencing that euphoria bullish mood. Everybody,
that's crazy.
Getting money.
Yeah, so 14 days or some shit.
Clean traffic. You know, we always feel clean traffic, but before it wanted to completely fill it, it wanted to retest this high. You know, now we know that looking in hindsight, but it did it abruptly and couldn't continue its bullish move and came, trending back down. But this move from testing this high, not from this consolidation and a breakout, it went back up and then it finally touched in. So we now almost on the daily, it didn't 100% feel it. It did wick below, kind of dropped down. If I zoom in a little bit, it did wick below that area. But for the most part, we actually came into that zone off this last week as we entered into August. So with that being said, I feel like it took a lot to get here, and the market has some retesting to do before we see any more bearishness, I feel like. So maybe we could feel this week going up and maybe tap into this area here. I don't know why I drew this. Maybe it's on the 1 hour, and look for reversals within this zone right here. Yeah,
I'm selling all the way up. I'm selling at 60.
There's a lot of consolidation it could reach into.
Let's see.
66.50.
Yeah, I'm selling at 66.50.
Nice.
Just small though, small. Then I'm gonna take some. I'm gonna sell again at 67.40. If it go down, every swing high, I'm selling.
And I mean,
well, if I get burnt twice, if I lose twice, I'm gonna stop selling, of course. But
and looking at who's stronger, I mean, yeah, we got some strong bearish candles, but we have seen some daily closes, some bullish daily closes. They're not the strongest candles, but we do have the weekly. None yet from July, mid-July, we've been experiencing nothing but bearish candles. So I would be wary about looking at buys, and especially until we start to see some, some type of push from the weekly. I don't really care about the monthly because that's a long ways away. As far as the monthly, we're looking to see if this going to engulf this. So looking at that from that perspective, I guess we would hope that, we would stay primarily bearish, but who knows? We are coming off of a weekly bullish engulfing, and this could also be looked at a retest to continue higher. So we just gotta wait to see how everything plays out, looking at the daily and the weekly. But
daily for sure.
Yeah.
If it closes above 6,600, then it may be a reversal. It may be trying to come up, but that's just money for me. I'm looking to let it ride up and take it right now.
Yeah, this is some clean traffic we have from Tuesday. So if we go down to the 4 hour, let's start to see. Okay, so that was a 4 hour gap. So yeah, I could definitely see market rising up here. That would justify that wick fill on the daily and then continue on our bearish pattern.
Yeah, the 4 hour and the 1 hour, I really like buys. I know it sounds crazy, but I like that.
No, it got to go up first. It don't sound crazy. I'm just not getting in it because I would feel stupid if I'm bearish and taking a buy and then go bearish. You see?
Right, because that's going against your bias. No, I totally agree.
Yeah, so I just let it run.
That's a long-term bias, though. So you all know, even as a scalper, we can make money while the market going up, even though you gotta your main bias.
Right.
Exactly. You can place a long position every time it does swing those highs, but as it's swinging those highs, you could be scalping it up.
Right.
Mm-hmm.
Yeah, I really like the traffic that's to the left on the 4 hour and the 1 hour. It's a lot of clean traffic, and I could see it kind of just creating higher highs and higher lows.
Yeah, I do like the clean traffic on the 4 hour right here. It's very smooth. Looking at this bullishness is not as smooth as the bearishness. So that kind of also lets me, it makes me believe that the bears are still in control because they didn't allow the bulls to just rip straight up. They had
you got it engulfing Friday too.
Exactly. So, and that's also an engulfing from this, this area right here. All these
from a swing high.
Yeah,
Friday had a swing high and an engulfing form.
Right. Tested this area. This is old support turn resistance, and there we had that engulfing. We didn't drop completely down because this is Friday. Sunday. So yeah, we just gotta monitor it and see what. Especially and from this point on, it's all lower time frame. Once we analyze the higher time frames and know what's going on, what to expect, we know we got a potential monthly bearish engulfing forming. We got weekly gap fills. We got daily swinging from the June 1st 4 hour gap, which is here. We got daily showing that we're trying to swing from that. So
would you enter a sell off of that 4 hour engulfing that just happened?
Would I?
Yeah,
following the engulfing, hell yeah, because it's bouncing off of this resistance area. So yeah, I would. Now I would enter a tester like we talked about, last week. But yeah, I would feel 1,000% taking that sell.
Now the one reason why I wouldn't is because it's coming from like a reversal signal. So you got a bullish engulfing that happened at the bottom at that weekly low.
Gotcha.
So because that's so close to that, and if you look to the left, it's cleaner traffic at that bullish engulfing to the left. So that's why you rolled up fairly easy to the next consolidation area.
Right here.
Yeah, we kind of rolled that up. Oh no, the candle right after the engulfing.
Oh, this one?
No. Go to the weekly bullish one at the low. The one that happened the low. Yeah. Then that next candle, because if you look to the left, it's no really consolidation. You just got a lot of wicks and stuff. It's pretty much clean traffic. So it just shot through that really quick, gave you a little, type of reversal type situation, and then a sandwich right after that. So you got this bearish engulfing. You thinking like, oh, okay, we're going back down, but where it closed at, look to the left, and it's not all that clean. It's very choppy, and it's at the bottom, like it's coming from a reversal. Now, if that would have happened at the second or third, like that in bearish,
like the second week of July, looking in hindsight,
yeah, or like that. If you back up on that 4-hour chart and see that bearish engulfing that happened at the top of that 4-hour gap around the. Yeah, you catch that. That was a good entry right there. Because now, you look to the left and your traffic is cleaner. So
what traffic? This traffic right here?
Yes. Yeah, right there.
Okay.
Yeah. So you're just gonna break through that. Like you don't want to. When you look to the left, you don't want to see like different color candles, different color, like back to back. Like, you don't want that. You know what I'm saying?
I feel you on that. I do feel you on that.
Now, what you could do if you enter that sell, you can have your take profit very, very small, like 10 pips. But if you do that, your stop loss go have to be greater.
It's a negative risk to reward. It's not a good trade from that scenario.
Come on. So that's what I look
looking at the 4-hour.
Yeah, because if price want to do anything, it will reach into that consolidation. And then it'll reject from there. Now, if it breaks through, then cool. You kind of roll I see that as rolling the dice because it's at the bottom, and I'm trying to take a sell at the bottom of this structure because I'm entering off of this structure. Yeah, it may show me otherwise on the weekly or the daily.
Yeah, I feel you.
No,
it's the bottom on the day chart. I see what you're saying.
That's the structure that I'm talking about.
Yeah, I know.
Yeah.
Yeah, I mean, I feel you on that. You are 1,000% correct. I do feel you on that, and most likely the market will want us to get into sales, and it might drop and swing these lows. But going back to that clear traffic, you got a whole lot of liquidity right here for that market to rip straight up.
Easy steps. And then you got to look where we are in the month, how we already had the NFPs. We already had the not the inflation, the interest rates. We already had that happen and stuff like that. So you got all that stuff that got out the way. So now this type of traffic that you're going to see right now, I think is going to be cleaner, easier to read, not that much manipulation. Of course, you're going to get it because you got different type of people trading algorithms, all that type of shit that we have no control over.
Right.
You got to look at the chart of structure and be like, okay, if I look to the left, what looks cleaner? So I'm going to wait for them buys to come in. Now, if it doesn't, then I'm waiting for it to close. Just like we said in the beginning, close below that weekly low on the daily, you know what I'm saying? Maybe the 4-hour, because after you scale back, I like that clean traffic on the 4-hour, looking to the left all the way when you scaled out of that a little bit more to see if we break below that weekly low to the left. I think you got clean traffic even on the 4-hour. So you got to be patient and just wait it out. Huh?
Nah, I see what you're talking about.
Yeah. But no, I'm talking about bearish movement. Like if you look to the left, it probably can reach. You see that clean traffic right there to the left. If it breaks below
this,
yeah, it can easily reach and fill in that traffic right there below the weekly low.
I think it did that already. It did that last week. This is the feel of this. Like this is nothing but consolidation down here. If you're talking about that,
that's what I'm saying. But if it breaks past from that, then yeah, we are smashing through that, and you know what I'm saying, because that's pretty much clean traffic. Yeah, exactly.
Yeah, we're going as the next target down here. What people was talking about 64 flat.
Right.
64.
Yeah, if you look at that weekly, I think it's coming down. You got lower highs, lower lows for the last 3 weeks. So, and then also, let me see.
If we
I
didn't
feel
get,
like
if we didn't get 2 or
this
3,
scenario is gonna happen. I feel like we are gonna get bullishness. I think it's gonna come tap into here,
right, and then
it's
come
going
out.
to sweep this low,
Yeah,
and then it's gonna rip up and feel
yeah,
that pressure. I feel like that's what's gonna happen.
yeah, yeah. I agree.
yeah, it's a possibility, man.
But this drop is gonna be the
The
bearishness
turn.
that August is gonna experience. So if we do get a bearish close, like the history presents, that we have a bearish August
It's
month,
gonna
I
dip
feel
further.
like it's gonna do that. This is gonna be September, and then we go rip up the rest of September. Potentially.
I think this week gonna be nothing but easy buys, bro.
Nice.
Like,
we definitely gonna see.
the only way that I'll be like, oh man, like maybe, maybe not. I gotta like the fact that it had like the past, what there was 2 or 3 days to close out the week, they were all bullish with wicks trying to reach to the bottom. So I see that as like for sure rejection, but it even shows better on the week.
CPI gonna be a big indicator too. Dollar and Asians, the CPI, Consumer Price Index.
That's this week.
Yeah.
Segue into the news.
Yeah, man.
Yep.
Perfect.
Yep.
So as we got the news up right now, Monday we have Australia news, Westpac consumer confidence, and the NAB business confidence.
August 10th. Yeah. CPI August 10th.
At 8:30. Then Tuesday we got balance of trade, 8:30 in the morning. Wednesday, no news at all. Thursday, you already know, jobless claims, core inflation rate.
So like,
year-over-year CPI.
I'm telling you, dog, this goes shoot up. Like, telling you, this goes shoot up.
So let's look at it. All right, the inflation rate is at 3. Its previous is 3. They expecting it to go up.
Yes, they've been talking about that since last month. Like they know what time it is. They gonna keep on raising it. So it's like,
and like you said, if they do raise it, and even if they raise it past this 3.3, that's gonna be looked at as negative. And what that's gonna do to the market? That's
shoot it up, right?
Straight up.
Shoot it up. Like this has been happening because we know why they doing it. If they didn't have COVID, this wasn't gonna be going on. So because they did, and they had to put all that money out. Now they gotta level it out with this inflation. Like it's been crazy easy because in the past this wasn't an issue. CPI inflation, niggas didn't trade this because it was like, oh, it ain't nothing. You know what I'm saying?
That's true.
It's at a normal level.
Yeah, this shit making NLP look like a regular ass Monday evening or something.
Nah,
you know what I'm saying? So like, yeah, bro, I'm telling you, like, I'm glad that we record this. Like I'm saying, I'll probably listen to these lives like twice a week for damn sure. Like on the days I'm really trading, at Tuesday, Wednesday, when I can really see the chunk of the movement of the week, I'll go back and I'll listen to it, and because we talk about everything.
Facts.
Yeah, I
just
really think
further confirm what we talked about on Sunday.
Yeah, man.
The previous weeks.
Yeah, though we be like Tom Brady, Eli, Peyton on here, Drew Brees. We be calling these plays, bro. And it's like the thing is being available and ready to execute. Because we all can read the charts and kind of like scale it out and see where price can go. But when it does go, where were you?
Right, you got to be ready to make it pay you.
Yes.
Got to get paid. We ain't watching this shit for nothing.
Come on, man. Come on. So, yeah, man. CPI, put buys in. No, let me stop. But like, I really do see a lot of weekly bullish move. But keep on going. Six. My bad, bro. Keep on going, Six. My bad.
Now you
it's
good?
Not financial advice.
Yeah, exactly. Thank you.
Friday, PPI and Michigan consumer sentiment. So that's what we have for the week. So Thursday, push.
Oh, so that's Friday. So we ain't gonna see none of that for real this week.
Yeah, bro.
Unless Thursday? What? The 9th?
Thursday is the 10th.
Oh, the 10th is Thursday? Oh, okay.
Yeah, Wednesday is the 9th.
Oh, okay.
But yeah,
Yeah, CPI.
Year over year.
Watch these swing lows on the
FXBros Supreme joined.
I don't know why I keep booting me in and out.
I was about to say, yeah, I was wondering what's down there.
I'm on the phone.
Oh, he said
always. Oh yeah, well yeah, this swing low, yeah, the 6600 area and that 6800 area. Yep. 66, well 65 kind of is the low, the last swing low. The previous swing low is at 66. Well, we don't know if that's going to be a support or resistance. It's a resistance right now. So,
yeah,
it's resistance right now. They got to break above that before, you know.
I'm going to say it is. Until it break above 68.95 or damn near 67 flat. I mean 69 flat. Yeah, we
bearish.
More so in a consolidation, but we not bullish until we pass that.
But how many pips is that away from where we are right now?
Right.
Shit, 350.
So I'll be damned if it moves up towards that clean traffic. I don't get a piece of that.
That is a nice risk to reward from the bottom to the top. That's on the day chart. That's a full.
Yes, buy.
If you look at it like this, on this rip up, and you would be waiting for this to be targeted, which it finally did instead of swing up. This would be your perfect area to buy. Like,
yeah,
this
is definitely a bottom for sure. This is definitely a bottom area. Like
traffic, it's nothing but steps.
Last week would have been better though. Last week would have been better to hop in, you know, because I'm telling you.
If that's the true low, because it could swing that. So
look, see, and that's the thing about the swing lows. You didn't know that last swing low was a swing low until really up until this day close on the day chart, because you know you need 2 candles in front and 2 behind. Today is gonna make that second candle behind, so this got to actually close with a higher.
You said on the day?
Yeah, on the day chart. Once this day closed, that's gonna solidify Thursday, August 3rd, as the new swing low. You see what I'm saying? Yeah. So, because on the higher the time frame, the longer you gotta wait for a confirmation of the swing. Because you gotta wait 2 bars after. So it's gonna take, if you're on the day chart, you gotta wait 2 days after. The week chart, 2 weeks after. So this is why this is a significant play. And usually when they form a new swing low, that's going to be the low. It's going to go up to the swing high area. So Jay, right, on that sense, we'll know today.
And to go a step further, when it forms a new swing low after it took out a previous low.
Well, that's how it formed a new swing low. That's the only way it came. You see?
Right.
That's what a swing low is. It swung lower than the previous low. You know, that's why that's last week. That's all I was really looking at, really studying them and just seeing how it move, at least on Australian dollars.
Let me tell you like this. Swing traders are entering buys probably. They looking at this and like, damn, this look good.
It got to close above that last swing low though. It got to before you get that confirmation. But it's on the aggressive side, yeah, go for it. Fuck it, take a stop loss is a stop loss. Shit, you know. Scared money don't make none. There's definitely
But and judging off of swing traders, if they were to enter this market, what do you think they had their stops? Below this low or below this low?
Below structure, so it'll be below the other low.
This one?
Yeah, it'll be below that.
If they entering right now, I'm putting it right at this last low Thursday, because I'm looking for a higher risk to reward. So I'm putting it right there. If it break this last low that it barely even formed, shit, I ain't trying to be in it no.
Well, yeah, it would have to go up and probably take out this liquidity up here, because Like you said, it is coming from this low. This is like, it don't have to sweep this, but it very well so can, because this position here, all the people that rolled this up, they were doing nothing but just adding to their position as it went up right here. I don't know how much of them believed in moving a stop loss up to here, because if they did, they stopped out already. But yeah, it could be either or. It all depends on the mind frame of the trader. Did they enter from here, or are they assuming this market as, I missed this move and I just want to wait for the market to come back down and swing and get in the buys from here?
Ain't no buys in the last few days. You know, if you go to that real, yeah, if you go to that middle area, to the left, where it kind of consolidated, where it made an M right there, right? Yeah, that area, that's the last time I think buyers really came in, and it, you know, a good amount, and they took profit right at that high up there, and then that's the day. So them 2, 3, 4 candles all red, yeah, they got out of buys for sure, because they getting stopped out.
A lot of buyers came in right here too.
That was a sweet buy.
Yeah,
that was a manipulated buy. They came in.
Yeah. That was the reversals, you know. Yeah.
And then reversal traders. They gave you a nice sandwich right after.
Yep. Ate your stupid ass up.
And that's when I enter, and then I get that other one that's like clean. Like, yeah, bro, them sandwiches be worth it.
Yeah. So I think
gotta be in the trend though.
Right. I think buyers are starting to come in now, like being, because it's at a low, right? So like Jay said, buy low. Some people gonna always just buy at them swing lows and just put, like you say, they will put they stop loss at that last structure though, just to see.
Doesn't it make sense? You got NFP 1 week, and then you got CPI coming to eat that right back up the next week. I mean, it kind of just makes sense when you just talk about manipulation, but I can't really call it 100% manipulation, because these are real numbers. You know what I'm saying? Like,
nah, you're right. That's a great way to look at it. Like, look at it from the bank, the central bank's perspective. Like, how can I manipulate this shit? You're right. That's a great way to look at it.
I do it for 2 weeks, and then continue. They go think in the beginning of the month we doing something else, and you know, like I like,
because they not gonna give you the obvious call. You see. Like, it's never going to be the obvious call.
And that's the most uncomfortable trade is the one you should be taking.
Yeah, you're not going to want to take it when it's there, right?
Facts.
Yeah, so.
Just like the people who are blindly taking buys as it reached this level. Like, you know, regardless if you know about this gap here, but they just looking at structure. Okay, it reached near this zone, and I got a daily bullish candle. Which what most people would do is, as soon as they see that bullish candle, no, they're not going to enter. Maybe if it was some kind of engulfing, but still they might, you know, test the waters a bit. But what they will enter is as soon as this high gets broken that next day. So that Friday, once it broke Thursday's high, they'll enter right there.
Yeah. A lot of people do that shit. I know I used to do that shit.
I mean, it's proof.
Those are good.
Look at the wick. Look at how much volume came into this candle after it broke. It went straight the fuck up.
They lost profit though. They lost some. They ain't lose, but
it all depends. If they manage that trade, then they knew to get the fuck out when they damn that filled that entire candle. Like, anybody would be like, okay, I didn't.
Yeah, and start coming down.
Yeah, man, get out of there. And then, especially with you, Pip, you know the ATR, like the back of your hand, you can look that up easily. So, you know, you got to be mindful of that. You know,
it's only gonna move so much in one direction. Now, and I noticed too with that shit is real too, because
FXBros joined.
Time frame I'm on. So like right now I'm on a day chart. I can see one ATR up is 66.46 and one ATR down is 64.93. But I can't see the last ones and shit, but you definitely could always look at the number. But I did notice once it touched that ATR, oh yeah, that shit go to reversing. Sometimes it might go to ATR. It might go to sometimes on the lower time frames, not so much on the day on the week, I don't really see that. But like once it's definitely reversal zone, you know, and the ATR don't got nothing to do with candle structures or none of that. So like that's something you want to look out for too, because you won't see it coming. You just be like, damn, it just was rallying, not a price dropping. Why? You know, so
right. You gotta look at the range and see, well,
yeah.
shit.
Eventually, that momentum is gonna slow down, and if you look at the lower time frame, you'll see the candles getting smaller.
Facts.
You know, the 15 and the hour, you'll see them getting smaller and smaller.
And then not only another thing to look at the average true range too is like if your ATR is say 80 pips, and you are trading during the day, what a market has already ran 100 pips.
You definitely want to kind of be on the reversal side.
You could, but the trick question is, when did it do that extension of 100 pips? If it did it,
it starts from the open.
It's at the hop, but I'm saying if it did it, and it's like, say if it's going bullish and the ATR is 80 and it went bullish 100 pips, then you know for sure, only depending on what time of day it did it. If it did it around, if it created the high at 100 pip move, and it did it around the New York, London, or around the London close time, then you could expect probably a reversal in that day. But if it did it around a daily close, which is 4 or 5 p.m., then that ATR is done. Now it's about to form a new day.
Yeah.
So the next day could form another overextended ATR of 100 pips.
Yeah, that's definitely insight.
Because it's always an average. You know, the average is 80, but they don't say it can't go past 80 or go under it.
It'll go 2-3 times.
Come on. So that's why you got to be mindful too. When it did that ATR move, if it overextended the ATR, when did it do it? Did it do it around volatility time when the volatility is over? So yes, we are probably primed to reverse, because now all the volatility there, the market about to rest.
Right.
To go the other way. But if it did it throughout the evening time, early evening, which is 1, 2, 3, when people don't really trade, but it's just ripping, then chances are it may not reverse, depending on if it closes and it's closing at a strong resistance. If it's closing at strong resistance, then the next day may rip back down and reverse. But if that's not the case and it closed at the end of the day and it overextended its ATR, it's a highly chance possibility that the next day could continue bullish and have an outperforming ATR day.
Oh yeah, it's all probability. So even ATR ain't 100%. Like that shit could go 5 times.
It can, but if you could kind of create an edge depending on what time of day it does it. This what I do to kind of narrow the things down. I'm looking at just that the crossover session. From New York open to what, 11 or 2? Is it 11? The New York open?
From New York to London close. London closed at 11 or 2?
Yeah, 11 midnight. I mean 11 noon, 11 a.m. to noon.
Right. So so that's I'm just looking at that time frame. Anything else kind of really don't even, like, I don't even put everything. Basically, my whole strategy, everything is centered around volatility hours only. You see what I'm saying?
Right.
Yeah, mine is like super, like straight up structured, technical.
FXBros joined.
Like straight up technical. Like right now, the 15-minute is a stupid sweet buy. I was just taking a look at it, like it's a dumbass buy.
The 15-minute?
Yes.
It just broke a swing high. That could be a fake out though. But
went, you looking at it because they got this clean traffic.
Clean traffic. Yep. I would say that's a stupid easy buy.
Is one ATR
engulfing, bullish engulfing setup. It engulfed all that nonsense that it did. Yeah, man. Like those type of trades, if that happened on the daily or something like that, then I would get in. 4 hour, 1 hour. Yep.
That volume is above average volume too on that 15-minute. Look.
Yeah.
That's something I don't even look at. Like, I see the structure, I see the setup. I'm like, oh yeah, that's like 2-3 confluences.
And even if you don't look at volume as far as a number, you can look at volume as far as a candle size.
Yes.
You know, a lot of volume is shown in wicks and body. So if you have a small body candle, but they got long ass wicks, then that's a lot of volume. You know, it may be closed ugly, but it still was a lot of volume to push that candle as high as it did. It's just that when it closes strong in one direction with a strong body, then the you know, you'll see the volume in that form, and typically you'll see the volume continue in that direction.
Yep. That's a fact.
Hence the fact why I said when you get a daily ATR confirmation that's overextended the average and it shows you that around 4 p.m., I feel like it's more of a highly are you back on? It's a highly probable chance that we will get another day of continued direction, whatever we are bullish.
Are those markings like New York, London? Is that from last week?
Yes.
Okay. I just want to make sure.
Fridays, Thursday. Yeah.
Okay. Now that's dope. I like how you mark it up like that.
Nah, I ain't do that. This is an indicator.
Are you serious?
Yes, and it's hard as fuck. It's right here. Called shit long as hell. I don't know what the easy one, but they got it's like one high and low solid 60. But I don't know this. That's the whole damn thing. Oh, ICT kill zones and sessions and indices. That's the name of the indicator.
Oh, ICT.
Yeah. So basically, it's just these dotted boxes or whatever. It's just indicating the area where the crossover happened and where typically you will see a lot of volume into the market. That's all that's saying. These lines up here are showing when the market opens. So London, 3 a.m., and it closes right here at 12. New York opens right here at 8 a.m. and closes here at 5. That's all that's saying. And you got Asian session right here. This dotted line for London is pre-London going into London Open, which is a lot of beginning of the day or beginning of the direction of the day leading into New York. Typically, you could, you know, especially if a low ain't been swept yet, you can catch a lot of good moves entering in on London Open. One thing I like to look at stuff like this too is it shows the session. So you see this is the Asian session, and you see pre-London, well, not pre-London, but pre-London here, and the London-New York crossover swept Asian low. It swept the Asian session low and then ripped back up.
Yeah, that's dope.
Same thing happened here. Asian session right here. Pre-London swept the low and then went up. Like it grabbed liquidity from the previous session and went straight up. And I you know, it shows it well. Granted, these boxes form as the market opens. So yeah, it ain't just like, oh, this is the high and the low of the market. No, this shit don't look like nothing until that time zone is done. Then you get to see, you know, and then basically you just trade and retest of that. So as you see a big rep up, you're looking for a retest to go long again type shit. So I do like your looking from the lower time frame, especially anything under the daily. Yeah, I do see the importance for long.
Yeah, the trend is starting to change.
Yeah.
It's creating higher lows.
And it's starting to. I like the fact that you said starting because
that's how you find swings.
True trend change.
Let me tell you like this, especially on a week like this, you can fuck around getting a buy and be holding that for a couple weeks.
True.
I'm telling
you can. If this
you
is a low. If the market finds some scenario up here, and then it's all about where do you consider your take profits, because a person will look at this bullish move as a nice bullish move if their profit was here, but then when you look at true swing traders, maybe they may be going for this up here.
Exactly.
So this move could go up, come down, create a new low, grab more liquidity, and then shoot up. So now this would be the actual low. Even though if you were to hold through this and you have justification that your stop loss is way the hell down here and you still believe that this is the buy, then regardless, if it swept this low and still go up here, this buy was still accurate. You know, you would just hold and draw down.
Yeah, if you entering on the 1 hour, but you got a freaking target that's like a swing target, so you pretty much looking on like the 4 hour and daily for your target.
Yeah.
So
right now, the 1 hour target would be right here.
Exactly. But if you're looking way up there, then yeah, you're looking at like the daily or something like that, 4 hour daily. So if you're doing that, then that means on the 4 hour to daily, wherever structure is, your stop loss need to be at the bottom of that structure.
Thanks.
Your target and your stop loss. You know, I'm talking to myself, man, in the mirror. What I like to do is I would have my target and my stop loss set on the same time frame. I can enter on whatever, but as far as like my target and stop loss, it has to be on the same time frame because that's the structure that I'm basing my bias off of. So until it breaks that,
you mean it from the 1 hour to the daily, your target is the same?
What you say?
You said from the, like, basically looking at 1 hour structure and then looking at the daily structure, your target would be the same?
No, like I'm just saying wherever you mark your target at, like if you look at this chart and you like, oh, okay, so on the 1 hour, it can definitely reach right here. So I'll put my target right here. Well, on that same time frame on the 1 hour, look at the bottom of structure where that weekly, you know what I'm saying, zone
down
was.
Here?
Yeah, down there, that's where your stop loss will be.
Because that's not a good risk to reward.
Exactly. That's what I'm saying. Like you gotta make it worth your while though. Like wherever your target is, it gotta be at the bottom of structure. Got to be at the bottom of it. So if you are putting it that low and you're like, man, that ain't a risk reward, I'm gonna have to raise my take profit, boom, up this way. If you don't see that happening, then don't take the trade if you're not comfortable with it.
Got you. Yeah. Meaning on the 1 hour, if your stop loss is down here, so we could pull that up. Let's pull up a long. If you enter in, let's say you entering up the break of this gap up here, your stop loss would be below this low.
So right there,
1 to 1. That's a 1 to 1. If your take profit is here, which we was talking about, maybe up in here, that's a 1 to 1. That's a 1.1 to 1.1 risk to reward.
Right. So, okay, we don't do that. So raise it up higher to that next zone. Right before that 4 hour gap. It don't have to be at the tip. Like right before, right there. Yep. What's that?
That's a 1 to 2.5. A little better.
So yeah, I'll probably rock that one. You know.
But the way you should, if you really believe strongly in this bullish move, the correct way to do it on the 1 hour would be you would go to the previous swing where you would place your stops, which would be
you would definitely wait for your setup or your
and look at the risk to reward now.
There you go.
That's the trade. You know, if it takes you out, the good thing about it, you only losing this much, but you was trying to gain this much. So every time this scenario sets itself up, you should be looking for, you know, something like this, you know, risk to reward of a 1 to 8, damn near 1 to 9 type shit, 9 to 1. And yeah, and that's how you would look at that. And eventually, if this is the low off the longer time frame, the higher time frame, which is the weekly and the daily, eventually these buys that you take should work out. So you could be in a scenario where maybe you may lose 3 setups, but that fourth one may be the real true move that is going to push higher, you know. But if your risk to reward is at a level like this, like every time you lose in one, you lose in one, you lose in one. But when you gain, you about to gain 8. Like you could lose 7 and be profitable. You feel me?
Yep, that's it. That's it.
But yeah, this overall, this trade would probably get hung up a little bit with this consolidation. So you'll be reaching these highs. And right now, as it stands, it's still a 2.3 to 1, which is not bad. You know, it's not a bad situation. So if you were to take these buys and you're in them, basically with it tapping into this gap too, this 1 hour gap we have right here, market tap down into that and took out, that would be a nice little buy. A lot of people get into those buys, but like you said,
Really good buy, man.
It's a lot of liquidity down here too, because it didn't fully fill this whole price gap. It just kind of tapped into it, so there's still another level of liquidity that it can come into potentially. But as it stands right now, yeah, this trade is looking golden for whoever's in it. Yep. Yeah, man. Tomorrow morning, I won't be on the live in the morning. I won't have a morning live because I got to go back out this house we wrapping up that we were finishing off our clean out in Weatherford, which is an hour away from where we live.
Yeah, I'm very familiar with Weatherford.
Yeah, so we out there. But it's nice though. If you like that rural country living, it's real nice out there.
Yeah, it was like super bad when I was in high school. I know they probably, improved on certain areas and stuff, but yep, it's very rural out there. They got nice land out there.
Nah, facts. The house I don't know if I put any pictures up, but beautiful ass home. Like I think it's like a 6-bedroom, 4 or 5 bathroom house.
Wow.
Ranch style. So that means it's like nice and like them long houses, not the 2-story, 1-story long houses, just take up a whole lot of space. It kind of reminded me of Aunt Jess in them house when they used to stay in Marshall.
Yep.
You know how we used to just go to room to room to room and that bitch just keep going.
Mm-hmm.
But that was sitting on 13 acres. So yeah, you can run forever.
Dang, right quick.
Still be on your land.
Man, come on.
But yeah, man. So I'm gonna be over there early in the morning, and but nonetheless, I will be up. So will the charts. And looking for possibly a nice little early move into what London is gonna do for New York.
Yeah, man. It's just whatever happens, be patient. Let the market do what it do, and look at what it's doing. You know what I'm saying? Mm-hmm. Look at what it's doing in the grand scheme of things, and then look at what it's doing on your entry time frame. You know what I'm saying? Like it can look like sales on a weekly, but you know what I'm saying, you might be getting into buys for this week.
True. Which I do feel like we will have buys, but and the reason why I speak highly on that is looking at the weekly, like we already engulfed, and right now we already heading up. I don't know if the weekly is still showing engulfing. No, it wasn't a weekly, it was a monthly. Yeah, so we still engulfing that. But yeah, that'll be a thing to watch. Look and see how this candle maybe reach up into this this open of this previous candle, which would be 66.61.
Yeah.
So yeah, that would be crazy. 66.58. So yeah, we got a lot of little areas to monitor, which we will, and we'll keep everybody updated in the chat like we always do.
Yes, sir.
You heard me?
Yeah, this was an easy one.
Nah, big facts. So yeah, we'll be like I said, we'll probably continue the lives on Tuesday morning. I'll be back Tuesday morning. We'll be on this whole. But Monday we won't be here, but we'll be updating everybody in Telegram. So y'all be active. Whatever y'all see, post it in there, and let's keep this shit rolling, man.
For sure, for sure.
All right, brother.
All right, brother. All right, fam.
Peace, peace.
Peace, peace.